Every year, it feels like we're all trying to solve this giant puzzle, right? The Canadian tax system. But how does it actually work? Well, today we're going to pull back the curtain. We're going to follow one person's income step by step through the entire process. This isn't just about the numbers, it's about the story those numbers tell us. So, here's our game plan. First, we'll get to know our taxpayer and his family. Then, we'll dive into the math, calculating his net income, then his taxable income. After that, and this is the exciting part, we'll see how tax credits work their magic. And finally, we'll land on the bottom line. All right, let's get started. You see, a tax return isn't just a form filled with random numbers. It's a financial snapshot of a person's life. Their age, their family, their job, it all matters. So to understand the numbers, we first have to understand the person. Okay, let me introduce you to Mr. Thomas Baxter. He's 66, lives in BC, and we're looking at his 2025 tax year. Now, the two big numbers to keep in your head are his employment income, $86,550, and his old age security benefits. OAS is a government payment for seniors, but as you're about to see, it's not quite as simple as just getting a check in the mail. Now, here's where it gets really interesting, because Mr. Baxter's tax return isn't just about him. His family is a huge part of the story. His wife has a low income and also qualifies for the disability tax credit. His daughter, Lori, is in university. Each of these details is going to unlock specific tax credits that will dramatically change his final tax bill. All right, let's roll up our sleeves and do the first major calculation, determining net income. You have to think of this number as the bedrock for everything else we're going to do. It's a critical first step. So what is net income, really? Simply put, you take all your income from every source, and then you subtract a few specific things. The big one for most people, including Mr. Baxter, is their contribution to the Canada Pension Plan, our national retirement program. Okay, remember that OAS benefit we talked about? Mr. Baxter got a total of $8,750. On paper, it looks like a standard payment for seniors, but the tax system has a little twist built in, and it's a really important one. And that leads us to the million-dollar question. Well, the $8,750 question. He got the money, but does that mean he gets to keep it all? The answer, probably not surprising, is no. And this is where we meet something called the OAS clawback. So check this out, this is how it works. There's an income threshold, and for 2025, it's just over $93,000. For every single dollar Mr. Baxter earns above that line, he has to pay back 15 cents of his OAS. It's basically the government's way of making sure these benefits are targeted more towards seniors with lower and middle incomes. For him, it works out to a repayment of $116. And there we have it, our first big number. We've taken his total income, we've subtracted his CPP payments and that OAS repayment, and we've landed right here. His net income for 2025 is $94,110. Let's lock that number in. Okay, we've got net income. Now for the next step, figuring out his taxable income. This is a subtle but really important distinction. This is the number that the tax rates are actually applied to. Now, a lot of people might have other deductions that lower this number even more. Think RSP contributions or childcare costs, but Mr. Baxter doesn't have any of those this year. So in his case, it's pretty straightforward. His taxable income is exactly the same as his net income, $94,110. This is the number we're going to use to figure out his starting tax bill. Okay, now we get to my favorite part of the whole process. This is where the magic happens. Tax credits. This is how tax policy comes alive and directly slashes the amount of tax you owe. Before we go any further, we have to get this straight. It's absolutely crucial. A deduction reduces the amount of income you pay tax on. A credit, on the other hand, is like a gift card from the government. It reduces your final tax bill, dollar for dollar. In Canada, federal credits are worth 15 cents on the dollar, which means everyone, no matter their income, gets the exact same benefit. Whoa, okay, I know that looks like a lot of lines on a form. Don't get overwhelmed. We're not going to go through every single one. We're just going to zero in on the big ones, the ones that are really doing the heavy lifting for Mr. Baxter. So what's he got in his toolkit? Well, he gets the basic personal amount, pretty much every Canadian does. Because he's over 65, boom, he gets the age amount. And then his family situation kicks in. He gets a spousal amount for his wife, he can claim her unused disability amount, and he can even claim some of his daughter Lori's tuition. This tuition transfer is such a perfect example of policy in action. Lori, the student, doesn't earn enough to need the full credit herself. So the system says, hey, no problem. You can transfer a chunk of that to your parent to help the family cover the costs. It's a direct way of supporting families with kids in post-secondary. Now the medical expense credit. This is a masterclass in how thresholds work. The family had almost $3,000 in medical costs, but you can only claim expenses that are above 3% of your net income. So for Mr. Baxter, he can only claim a credit on a measly $20. The idea is that the system helps with major, unexpected expenses, not everyday ones. It's a really stark example. The system also wants to encourage giving, but it's interesting. It uses different rules for different types of giving. For his charity donations, the credit is bigger for larger amounts. But for political donations, the credit is more generous for smaller amounts. You can see the policy goal, right? One encourages significant philanthropy. The other encourages widespread grassroots political engagement. And here we are, the moment of truth. We have all the pieces of our puzzle. We have the taxable income, we have the total value of the credits. It's time to put it all together and see what the final bill looks like. First things first, we apply the federal tax rates to his taxable income. This is where the different tax brackets come into play. When you do all that math, you get this, a starting tax bill of $16,137. Okay, that's a big number. But we're not done yet, not by a long shot. And here it is. This is the power of credits. Look at that. When you add up everything, the personal amount, the spousal amount, the donations, all of it, they combine to create a massive $7,537 reduction. That comes right off the top of his tax bill. So, you take that initial tax, you subtract that huge credit amount, and we finally have our bottom line. Mr. Baxter's total federal income tax for the year is $7,382. That's the final answer, the end of this whole journey from his first dollar earned to his last dollar paid in tax. So we just walked through a whole lot of math. But it's so much more than that, isn't it? A tax return is a story. And when you see credits for age, for disability, for students, for families, you're reading a story about what we as a country have decided is important, what we've decided to support. So what do you think this family story tells us?